Joining me now is the man himself, Council of Economic Advisors Chairman and Federal Reserve Board of Governors nominee, Stephen Miran. Stephen, congratulations to you. Thanks very much for being here this morning.
Thanks, Marie. It's great to see you again. Thanks for having me.
Give us your sense of what your role would be and the decision-making you will be undertaking should you be nominated as this next Fed governor. What are your priorities?
Thanks, Maria. Well, as you know, at the moment, excuse me. At the moment, my priorities are continuing to help the president and the rest of his team create the best, most vibrant, most booming economy in history. And I got to say, that's all going very well. You know, the economy is just on fire. Inflation is under control. The president has scored win after win after win with the One Big Beautiful Bill, restructuring global trade, bringing in trillions of dollars of commitments. It's just been a tremendous string of successes, and I expect it to continue like that. However, with respect to the Fed, you know, as you know, I do have a nomination coming in front of the Senate, so I have to let the Senate do its process, and there's limits to what I can talk about with respect to the Fed. But, you know, what they do is very important, and I'm looking forward to, if confirmed, being a part of it.
Well, let me ask you this. I mean, the Federal Reserve has a mandate, and that mandate is to ensure we see growth in employment as well as keep inflation at bay. But President Trump has been, you know, pressuring the Fed to cut interest rates, partly because of the fact that the interest on the debt that we hold is rising with these high level of interest rates. Is it a reach to believe that the Fed should also be concerned with debt and the fact that we spend more on holding that debt than we do on defense spending? Shouldn't that be part of the mandate of employment growth and keeping inflation at bay? It's all connected.
Look, you know, the Fed is an independent agency, and the Board of Governors and the Federal Open Market Committee make their decisions independently. You know, nevertheless, the president does have a right to his opinion, as do other politicians that express their opinions too. And the president has, I think we have to acknowledge, a fantastic track record on this issue. Right? He has been right many times in the past. And by the way, in the past, lots of folks didn't believe him in 2018, 2019 when he said that inflation wouldn't be a problem. They didn't believe him in 2021 when he said inflation was coming back and we had to worry about it. And a few months ago, they didn't believe him again when he said inflation wasn't a problem. But each of these three times, he's proven right, and many of the critics have proven wrong. So I think it's fantastic that he has opinions on this question. I think it's fantastic that he has such a great track record on the question as well. But at the end of the day, the Fed makes its decisions.
Yeah, I mean, look, I know that the search for the next Federal Reserve Chairman is on, and President Trump says that he's down to just a few names in the running. Here's what he said, watch.
I'll be naming a new chairman sometime within the next, I think I'll name it a little bit early, the new chairman. I'm down to 3 or 4 names, all good, all great. The problem is you name them and then they turn out to be not good. That's happened to me a couple of times. You name somebody, they tell you everything you want to hear, and then they go in and they turn out to be not good. I mean, he told me everything that I thought was appropriate. He turned out to be a stiff, you know, real stiff.
And, of course, we know that Treasury Secretary Scott Bessent is leading the charge in terms of interviewing potential chairman candidates. The president just told us it's down to 3, and I would expect that would be Kevin Hassett, Kevin Warsh, and potentially Mickey Bowman. I spoke with the secretary myself in terms of what he's expecting from the chairman, and I also asked him why the predictions about what the Fed should be doing right now. Watch this.
We want someone with a broad knowledge, brings credibility, can bring credibility to the market. So I want to see people who are forward-looking, not backward-looking. On regulation, since the great financial crisis, we've been in a regulatory straitjacket for the banking system. When you see this big credit increase outside of the regulated system, and there's an arbitrage there, it tells you that the regulatory regime is too high. The Fed is a sprawling organization, and I want to see someone who is going to rationalize it.
Stephen, what would you like to see in terms of the macro story right now and the fixes that it needs? You said everything's going very well. I agree. But what are your thoughts in terms of where this economy is headed next?
Well, first, let me comment on on what you were playing a moment ago. Look, I mean, I think again we have to acknowledge the president has a fantastic track record in terms of choosing personnel. He's put together the most talented economic team in history. And you look at the accomplishments of folks like Secretary Bess and Secretary Lutnick, you know, Ambassador Greer, Kevin Hassett, Director Kevin Hassett, Peter Navarro. Like, these guys have just racked up win after win, bringing in other countries to accept tariffs, make commitments to invest in the United States. It's been fantastic. And I do think that's going to continue to have great effects on the economy, as has been the case and will continue to be the case. When I think about the economy going forward, I really want to think about where is inflation going, right? And to me, it seems like it's been very well behaved. It seems like it's been running at a 1.9%. CPI has been running at a 1.9% rate since the president took office, which is exactly where you want it to be. And we see plenty of disinflation in the pipeline from, among other things, the deregulatory effort that makes it easier for companies to produce more goods and services. More goods and services means less inflation, as well as the border policies. Making the country safe for Americans also relieves pressure on the housing system. When you import millions and millions of migrants in a short period of time, they don't bring houses with them. It pushes up the cost of living. It pushes up rents. The Council of Economic Advisors has estimated that caused about a quarter of the overall rent increase since COVID from the open border policies, right? That's huge. We're reversing that. That's plenty of disinflation in the pipeline.
So let me get your take on what a cut would mean for this economy. The president has been saying that every point cut or every point move represents $350 billion to the U.S. government. I mean, that is real significant. And I spoke with Scott Bessent about it yesterday. Here's what he said. Watch this.
A couple of things, Maria. I didn't tell the Fed what to do. What I said was that to get to a neutral rate on interest, that would be approximately 150 basis point cut. I did not call for them to get there. The other thing that I said was that perhaps because they had bad BLS data in June and July, that perhaps a 50 basis point cut in September was warranted.
So what do you think then, Stephen, in terms of what a cut would represent to the United States as it handles this interest on the $37 trillion in debt that we hold?
Yeah, look, as I said before, I do have a nomination coming in front of the Senate, so I'm just a little constrained in what I can say about interest rate cuts. But, when I look at the economy, when I look at inflation, I think things seem pretty benign.
Things seem pretty benign on the inflation front, and I want to get your take there because we had the July PPI report coming in a little hotter than expected. And what I took away from the PPI versus the CPI, because the CPI, the Consumer Price Index, was steady. And, of course, President Trump's policies have been effective in terms of reining in inflation and certainly oil prices. Do you believe right now that companies are eating the tariffs? Is that what's going on?
Well, I believe what's happening right now is we're working through a transition period in which consumers thus far have not seen any material macroeconomic increase from prices, from tariffs at all. The overall inflation indexes have been very well behaved. Even the goods indexes have been very well behaved. I believe that what we'll see over time is what we saw last time, that foreign countries the countries we're tariffing eat the burden of the tariff. I think that's what economic theory predicts based on the ability of the United States to substitute importing among different countries with different tariff rates based on the ability of the United States to make stuff at home as opposed to importing stuff from abroad, whereas the countries that export to the United States, they're dependent on us. They have no other option. That gives us all the bargaining power, all the leverage, and means in the end, they'll eat the cost of the tariffs. Now, it takes some time for that to become very obvious in the data, but I have no doubt that over time it will.
Very interesting, Stephen. Certainly the president's policies have generated billions, hundreds of billions in tariff revenue. We're watching all of that. Great to have you, and we will be watching the nomination process, sir. Thank you.
Thanks for having me.
All right, Stephen Miran is at the White House. Stay with us. We'll be right back.